right, we've ticked over 11:01 now, so I will kick off today's Payday Super webinar. So hello everyone, thank you very much for taking the time to join us for today's Employment Hero Payday Super What You Need to Know webinar. We've received a lot of interest in this one, so we're really excited to run through with you today. My name's Rob Dunn. I'm one of the GMs of product at Employment Hero, and I'm joined today by Tanya Drerup, one of our product extraordinaires. Tanya.
Hello, everyone.
Tanya's been going very deep into the whole Payday Super area over the last 6 months, so we're keen to run through with you today. Look, a bit of housekeeping before we kick off. Please type your questions in the box down the bottom of the Zoom screens. Oh, I'm seeing that there's echo really bad from mine. Let me see if I can adjust. Thanks for that, Joyce. Let me know if that makes the echo a little bit better, or if anyone else is noticing it, please let me know. But as Joyce just done, please type your questions in the Q&A box down the bottom of Zoom. We'll be going through a lot of detail today, so we'd really appreciate questions as we go. We've got a section at the end for questions, and it'd be really great to be able to run through those with you all at the end. We are recording the session, so we'll be able to make sure that we share the recording afterwards, and we'll make sure to try and get to all the questions that we can't address live as we go through as well. So let's dive in. So what we're going to cover today is everything, well, quick little intro about Employment Hero, then we'll go through the Payday Super legislation and the proposed changes. We'll go a little bit deeper into how Employment Hero is looking to make Payday Super a little bit simpler within our platform, and then what you can do as employers right now to get acting in advance of the Payday Super changes that are coming. So brief disclaimer as well today, we'll start with plenty of information that we present today is current as at today, so the 26th of August, and it's intended for discussion here today to be informative and educational in nature, and it's not to be taken as professional advice. So firstly, a bit about Employment Hero. We're aware that we've got a mix of attendees here today that are both existing Employment Hero users and non-EH customers. So we just wanted to quickly give a brief outline about Employment Hero. So we're one of the world's first employment operating systems. So we have a single platform that has all parts of employment in one space, from hire to retire, making sure everything's in one space, covering talent, HR, payroll, and benefits. We're serving more than 300,000 businesses to help them hire great talent, pay them accurately, manage HR, and deliver benefits and recognition. We have over 2 million employees and job seekers using Employment Hero, and it's really their passport for work. So it helps to manage admin, access new opportunities, and grow careers for all those employees and job seekers. So that's a little bit about Employment Hero, but why don't we dive into what we're all here for today? So the Payday Super legislation and proposed changes. So we just wanted to firstly start with a quick timeline, just to give context of everything that's happened to date and what's coming down the line with Payday Super as well. So in the top row there, we've got the what's happened. So I'm just going to run through a high level of that. So, the Payday Super was first announced by the government in May 2023. And at that time, they confirmed that 1st of July 2026 go live date. There's been some speculation that the date may change, but it hasn't shifted in all the updates we've received to date. And it's been reinforced by some of the new requirements that ATO has placed on infrastructure players in this area as well. So at the moment, until we hear further updates from the final legislation, we're still expecting that 1 July 2026 date. So since Treasury opened the consultation, they've confirmed that the new payments platform, NPP, we'll use a few acronyms today, please. I'll try and make sure to explain them all. Call me out if we get it wrong and use the acronym without explaining the full term. New payments platform, which is the real-time payments rail, is definitely the preferred payment method for super contributions going forward. And this has been reinforced in some of the exposure draft legislation that was released in March. The ATO also outlined major upgrades to SuperStream network, which is the network of gateways and clearinghouses that make sure that all the data in relation to super contributions goes through to funds. The ATO released updates about the Superstream network infrastructure and how the gateways are to process contributions. And that also really outlined, expectations around how they complete fund validation services, payments clearing, and error management. So that's a bit about what's happened to date. The bottom row about what's coming. So looking ahead, we're hoping to see the final legislation sometime in the last quarter of this year. So that's still to come. From 1 October 2025, the Small Business Super Clearinghouse will close to new registrations. And from 30 June 2026, it will be shut down completely. So that's a big shift for any small employees who have up to now relied upon that Small Business Super Clearinghouse. And then we hit the main date. So from 1 July 2026, the reforms go live. So for employers, that means contributions will need to be paid every pay cycle. Funds must be received within 7 days. So the contribution must go to the actual super fund within 7 days. And new penalties will apply for delays and errors. And then on the ecosystem side, the Superstream version 3 mandates will roll out. Funds will need to start accepting new payments platform contribution, NPP, and they must return unmatched contributions, so where they haven't been able to match those contributions received within 3 business days. That is all under the current proposed draft legislation. We're obviously waiting for that finalised. So some of this is still subject to change, but this is where we stand at the moment. And so now moving on to just some of the most impactful changes for employers. We just wanted to highlight these up front, and then I'm going to hand over to Tanya to go much deeper into the impacts, the legislation as it stands right now, and what it means for business. So high level, the most impactful changes for employers is around, firstly, that super needs to be paid every pay cycle. So there's no longer going to be that quarterly exercise that is a bit of a buffer. Instead, you'll need to be paying all superannuation contributions in line with your either weekly, fortnightly, or monthly pay cycle. So that means that you'll need to be calculating, funding, and paying every time. And critically, the funds must be in or received by the super fund within 7 days. That's down from that 21-day current buffer that's there. So this really increases the frequency, urgency of compliance, and it's going to put a bit of pressure on cash flows if you're moving over from that quarterly cycle to the weekly, fortnightly, or monthly cycle that you might be running payroll at the moment. The second point there is that we will have a new Payday Super Guarantee charge, so the SGC. So if you were to miss one of the 7-day deadlines for funds to be sent from your payroll out to the fund, then there's a new penalty regime that applies. So it's much tougher than today's SG charges. So even a short delay can result in backdated earnings or administrative uplifts that are not tax deductible as they were in the past. So the cost of getting this wrong is a bit higher under the new regime. So that's a big shift for employers. And then thirdly is the big change around accuracy. So the ATO and super funds are upgrading their systems to enable real-time matching of funds at the member level when employees on board. And so that means that systems that aren't integrated may struggle to remain compliant because it's going to be harder to confirm that the details that your employee has provided during onboarding are accurate, and it will increase the risk that there might be some errors at the time of super contribution clearing and payment. So it's really good to have integrated systems during onboarding and the run-in of payroll to reduce this risk of any rejection or delay. So while the reforms are absolutely great for employees in terms of making sure that their super balances are growing through time, we do need to acknowledge that there is some compliance and operational burden that's going to come onto employers. And that's where we're really looking at how we can work with employers throughout the ecosystem using the Employment Hero platform to make it simpler, easier, and really to back around some of this compliance oversight and operational effort. But firstly, I'm going to hand over to Tanya to go a little bit deeper into some of the Payday Super legislation.
Cool. Thanks, Rob. So just to give you a bit of context, in 2023-24 financial year alone, the ATO raised 1.91 billion in superannuation guarantee liabilities through employee disclosures and compliance actions. So I wanted to tell you that because this highlights the scale of unpaid or late paid super across the system. And as Rob touched on, under payday legislation, employers must now ensure SG contributions are received by the employee's super fund within 7 calendar days of each payday, not just paid or processed, but landing into the fund. And unfortunately, most employers are trying to do the right thing, so they're unintentionally triggering the SG charge simply because they don't realize how quickly these payments actually must clear. So while most of us who hear about payday coming, we're across the 7-day rule, and that'll imply most cases, there are actually some specific scenarios within the legislation where extended timeframes apply to support the practical implementation. So, for example, new employees. If you have a new employee, the employer has up to 21 calendar days from first payment of qualifying earnings to make the super contribution. So, for example, Jamie starts a job and is first paid on August the 1st. The employer has until August the 22nd. Another example is for out of cycle payments. So I'm referring to bonuses or, for example, commissions. If an employee is paid outside their regular pay cycle, a one-off bonus or back pay, the SG contribution doesn't have to be paid immediately. Instead, the contribution can be paid by the due date of the next regular payday. Another scenario that is outlined in the proposed legislation is if their stable fund provided by the ATO for the new employee is refused and the SG contribution is refused. For example, if the fund is closed or inactive, that does happen. The employer has 42 additional calendar days from payday to make a replacement contribution to a valid or alternative fund. Another scenario is if an employer default fund fails the annual APRA test performance 2 years in a row and it becomes ineligible to receive new members. In this case, employers must take 2 actions within 42 calendar days from payday. So 1, reoffer the employee choice of fund. 2, ensure SG contributions are made into the eligible fund and that it can accept new member contributions. Final scenario, it's for exceptions for systematic disruption. So the legislation allows for flexibility in cases where there are widespread disruptions such as natural disasters or major tech failures, for example. So in such situations, ATO can declare an exception period and grant employees extra time to make contributions. Now, one of the things that Rob will touch on later is our solution for payday, but comes along with our solution is comprehensive login audit trails. So for each payment event from payroll to fund receipt, we're going to make sure that it's time-stamped, linked, creating a clear audit trail. So this ensures that there's transparency, supports voluntary disclosures, and demonstrates that you've complied with the ATO rules. So next page, Soph. Yep. So what happens if you miss the payment deadline, which is the 7 calendar days of each payday? So this is the new recalibrated super guarantee charge. So the first component is the SG shortfall. This is the super amount you didn't pay on time, and that's the starting point of the charge. Then comes notional earnings. Now, you want to think of this as the interest that the employee misses out on because their super wasn't paid into the fund when it should have been. So it's called the general interest charge. It's calculated daily, and the amount keeps growing every day you're late until it's fixed. Overall, this is meant to compensate the employee for the time the money wasn't in their funds earning interest. There's also a administrative uplift component, and it's a big penalty fee, up to 60% of the combined unpaid super and interest. Now, Why is this so high? It's meant to cover ATO's time and cost chasing unpaid super. This sounds like a lot, but the good news is you can reduce this amount if you, one, you tell the ATO voluntarily about the mistake before they contact you. Two, you haven't had any other super compliance issues in the past 2 years. And if reduced, it can go down to 40% or less. If applicable, there could be a choice loading component. So if you didn't pay super into the correct fund the employee chose, the ATO does add another penalty. And there are also extra penalties for ignoring the ATO as well. So if the ATO notifies you that you owe SG charge and you don't pay it within 28 days, there's an additional penalty, 25% added to the amount if it's your first strike, 50% if it happens again. And importantly, this extra penalty is not tax deductible. So what can you claim on tax? Well, the tax deductible component, if you pay the unpaid super and charges before the ATO steps in, those costs can usually be claimed on your tax return. So this includes the unpaid super, the notional earnings, which is the interest component, the admin uplift if paid early, and any choice loading. What's non-tax deductible? Interest and penalties after the ATO issues an official assessment. The late penalty added 28 days after assessment. So those components are non-tax deductible. So in the next slide here, wanted to give you a bit of an example in terms of the current SG charge and the proposed SG charge. With Jamie here, so Jamie earns 80K a year. His employer misses a super payment, and under both systems, you can see the shortfall is exactly the same. The interest in the new regime is calculated daily. Here it's $4.55. Admin charge is much bigger, $553.80. But if the employer tells the ATO early, that charge can be reduced to $369.20 or less. If they still don't pay after the ATO sends notice, a 50% penalty is added. So total cost, one with early action, $1,481 roughly, and with early disclosure, $1,296 roughly. Now, overall, this paints a clear picture. Under Payday Super, missing a super payment can cost 30 to 50% more than under the current rules. But employers can save money if you act quickly and disclose late payments early. And so it's more important than ever to treat super like wages, paid on time every time. Yep. So next, we're just going to run a little poll here. And so the question is, and I can't see the question. Oh yeah, if Payday Super started tomorrow, would your current process hold up? Yes, no, or unsure? So we're going to leave that open for another 30 seconds. That's really interesting. So I can see majority of people said that, yep, the current process will hold up. No, it wouldn't, or unsure. And this is very similar to some of the results we saw in previous surveys we ran, where there was still a lot of uncertainty in terms of whether current systems, internal processes would actually meet the payday timeframes and what's being proposed as well. So yeah, this certainly aligns to what we've been seeing in the sentiment out there. So the next change that we want to turn our attention to is what complements Payday Super is all around improvements to the employee onboarding process. So these changes are designed to reduce confusion, prevent duplicate super accounts, and protect employees from being steered towards unsuitable funds, especially during the time when they're trying to get things quickly sorted, such as starting a first job. So the first proposal is stable fund disclosure during onboarding. The key update is employers may show new employees their existing stable fund during the onboarding process. And what this means in practice is since 1st of November 2021, employers have been required to request stable fund details from ATO if a new employee did not choose their own stable fund. Now, once you receive the stable fund details, you can display them to a new hire, helping them clearly see what fund they already have. The other proposal is a ban on advertising non-MySuper products. So during onboarding, you can only show MySuper products with Payday coming along. And these two proposals align with Employment Hero's Super Choice Code of Practice, which clearly sets out our standards and expectations regarding clearly disclosing stable fund information and prohibiting advertising of underperforming products. So we've shared our code of practice with ATO and Treasury as part of our commitment to best practice. Next slide. Now, let's take a look at some important upgrades being made to how super is processed, both by funds and the ATO. These changes are all about improving speed, accuracy, compliance, visibility, and they directly support the shift to Payday Super with how quickly funds actually need to clear. So let's break them down. The first one is all around ATO enhancements and real-time fund matching. So ATO is certainly looking to step up its game with real-time data matching. So what this means is when you report payroll through single touch payroll, the ATO will now compare that data with what the super funds are reporting almost instantly. If there's a missed or late contribution, the ATO will detect it much, much sooner. In short, ATO won't be waiting for months to follow up. Mistakes or delays will be noticed almost straight away. The other one is around super fund processing timeframes. I think Rob did touch on this a little bit earlier. So the funds themselves used to have up to 21 business days to allocate or return contributions if they couldn't, for example, find the account. So that's changing. Funds must process or return payments within 3 business days of receiving them. So what that means is that your employees will see super appear much faster in their accounts. And if something goes wrong, you'll find out a lot sooner as well. And lastly, there's a lot of work happening around uplifting SuperStream, which is how super payments are sent and tracked electronically. The SuperStream standard is being revamped to support real-time payments using new payments platform, NPP. It'll give employers clearer error messages so you can fix problems faster should funds be pushed back. And there's new pre-validation checks so you can catch incorrect fund details before payment is made. So it's all about avoiding payment failures and helping employers stay on track. In summary, your obligations are now more visible, faster to process, and harder to delay. So mistakes will show up in real time. So it's about getting your systems ready and processes right before payday, which is something that Employment Hero is certainly here to help. So over to you, Rob.
Thanks so much, Tanya. So great to go through a bit of the detail there. And we know that some of these updates and changes could be a lot to run through. So we wanted to share a bit about how Employment Hero is looking into making sure that this transition is as simple as possible for our customers. So firstly, we've been actively engaging with many industry bodies and government groups, so Treasury, ATO, and many industry players, including clearinghouses and others, to make sure that the voice of small and medium business is really being heard and trying to put forward positions that really represent the impact of small businesses in this space. We've submitted responses to the draft legislation and making sure that we push for a fairer balance to make sure that we acknowledge that this change is great for employees, but we need to make sure that the overhead of compliance, operational, and even cash flow for some businesses is understood. We're making sure that our platform is ready for this change. So our future ready technology. So we're introducing or building out a solution called HeroClear, which will be ready in advance of the July 2026 go live date to ensure that we have in one space the ability for people to easily automate their compliance, reduce manual overhead, and eliminate stress. So we'll go through a bit of that shortly. And so extending on that, as part of really making sure that we have an all-in-one solution, we're making sure that Super isn't a separate process that has to run through, payroll, onboarding, clearinghouse in all separate environments. And how do we make sure that through our interface, it's as easy as possible to complete onboarding, payroll, payments, and be compliant across all stages within the Employment Hero operating system. So there's a lot that we've been doing in terms of advocacy, technology, and integration. Our goal is to make sure that we keep it as simple as possible for you. So we wanted to just give a little bit about what today's superannuation ecosystem looks like. So a little bit complex on this slide, but it is a lot of moving parts in the function of superannuation contributions and clearing. So it is quite manual, fragmented, and difficult at the moment. And there's a lot of employer actions. So starting just, at each stage, the employer needs to complete their employer actions. That feeds through to the SuperStream processing network where the data of all contributions runs, and then payments also run out. And then that goes to settlement within the fund. So those are the three stages, but I'm just going to dive into each a little bit more. So with employer actions, it really does all start at onboarding, that box at the first left there. So right now, many employers are completing manual onboarding. And so capturing super choice details from employees or updating that into the payroll system can be a challenge. So it's best to look to start using digital solutions and ones that will start to be more integrated with the superannuation ecosystem, including ATO and other gateway providers and funds, so that your employees' details can be validated and captured securely during onboarding. So that's really a great opportunity there to look at how you move away from those manual solutions. Similarly, the employee needs to run through updating payroll, completing the payroll, passing the data of payroll off to your clearinghouse if you're using an integrated clearinghouse. That might be a bit easier if integrated, otherwise it's a transfer of the SAF file. And then also making sure that your clearinghouse has the money available from your bank accounts. That might also be a manual transfer. Then you review and complete all that data before you push that out. So really from there, we move to making sure the payroll data is pushed to the clearinghouse. That's sometimes integrated or not, as I mentioned. And you've got to double check the contributions before sending them out. When you do send out your contributions from a clearinghouse, that runs through this SuperStream processing network. So that's where the gateways get involved or clearinghouses to really make sure that all that contribution data is pushed through the network and reconciled and received by the super funds. So that'll be your employees' member number and details to make sure that that's all in the package running through. Payments also run through banking. And then we need to make sure that both the payment and messaging data through SuperStream land at the fund at the same time so that they can reconcile that and not have any errors or returns. So unfortunately, it's not as simple as, payroll where the money does just go straight to the employee's bank account. It does work well when all the data is accurate and there's no issues or returns. But unfortunately, when that does fall out, there's errors and we need to have responses from the funds that go through clearinghouses or back to you to be resolved. And that's where some of those new penalty regimes are coming in. So there's multiple handoff points, errors and delays, and we're really, from Employment Hero side, looking at how we can make sure to make this easier, clearer, and faster. So if we move on to the Employment Hero perspective, we're really looking at how we can make this simpler, integrated, and real-time. So the SuperStream processing and settlement sections we've left the same, but we're really looking at how with our HeroClear solution, we can bring a lot of those disparate functions of onboarding, processing payroll, integrating with a clearinghouse and moving money into that clearinghouse into one space so it's easier and faster. So the big change is that everything from that employer side is all in one space: onboarding, validation, contribution calculations, and payments, making it integrated and faster. So no more handoff points between payroll, HR, finance, and your separate clearinghouse. So how it works, the HeroClear solution will make sure that employees' super details are automatically captured securely during onboarding, validated through the fund validation service and integration with the member validation service that we have in place or we're building out as part of Go Live. And then contributions will be calculated obviously within your normal pay cycle. And then funds can be pulled directly from your bank account or within your payroll platform, so that then the clearing can be run directly out of your payroll platform without having to move over to the clearinghouse solution. So every pay run will be right there for you, much more easily integrated, securely compliant, and in real time. It'll really help to remove some of the risks. So it means no more manual file uploads, chasing payments, or double handling across different platforms. And it's all focused on making sure that we can minimize double handling, manual process, and the risk of errors or delays or rejections that can cause those penalties to come in. So dramatic shift coming through. We're really working very hard to make sure that this will all be in place prior to that July 2026 date. And we've been working closely with gateways, funds, banks, providers, and ATO and others in this space to both lobby for SMB perspective, but also plan out this new solution to help employers using our platform when Payday Super goes live next year. So going a little bit deeper into exactly how this operation will work. So the Employment Hero Payday Super solution is going to really separate it out into 3 stages: making sure compliance is easy, automating those workflows, and having fast and flexible payments. So as I mentioned, it all starts with the onboarding. Today, when you onboard an employee, you need to capture their personal details, bank accounts, TFNs, and choice of fund form. But the challenge is that doing this accurately and securely can be difficult. So our digital solution will be integrated with ATO and other services to make sure that validation can happen upfront and in real time, so that all data that enters your HR or payroll system is accurate and validated before you even complete the pay run event. This means errors are caught early, reducing any downstream rejections or delays that could result in penalties. You'll also get a complete audit trail of receipts and system logs. So if there are any ATO challenges or you've had any delays that weren't outside of your control, you'll be able to evidence those to hopefully have reconsideration around some of the charges and penalties, the superannuation contribution charges that come through. In relation to automated workflows, once employees are set up, super contributions will be automatically part of payroll or within one space within your standard pay cycle. You won't have to jump between systems manually to push data around or reconcile across separate reports. So we'll be able to help you to calculate, report, and complete initial contributions in line with legislative requirements or within the single pay cycle. That makes it easier and all in one space. And critically, it's not just about the data. The HeroClear service will be enabling the ability to pull payments directly from the payroll platform. So it'll be remove the need to do ABA files or log into the banking platform to complete the movement of money. So we're trying to make it as simple as possible to run all reconciliation, payroll, and movement of money in one space. So that goes into the fast, flexible payments as well. This is where we'll be leveraging the new payments platform, which is the ATO's preferred method for the future of Payday Super, to support instant movement of money. And this will enable really ensuring that contributions are meeting that 7-day deadline every time. You'll be able to have other options as well, so direct debit or pay to or account to account transfer, whatever your banking setup looks like. But we're trying to provide the options to make sure that you are able to run the movement of money your way, but also ensure that you're going to be compliant with those timelines. So behind the scenes, we've been working with banks and MPP industry groups to make sure that the rails are ready, because there are going to be some serious volumes that are going through MPP rails off the back of this. But it's a really exciting opportunity with Payday Super coming to deliver a solution like this that hopefully will really power simplicity and ease in one space. So with that, we'll move over to our second poll. So we're interested to hear from everyone. Currently, can you securely collect and validate Superfund details for every new employee before payday? So we're interested to understand, just how people's onboarding process currently runs. So yes, mostly, not yet, no, or unsure. I will give a little moment for people to respond to that one. All right, so we should see responses coming through soon on that one. Yeah, so I can see the responses coming through now. So basically we can see that around about 30% of employers are saying that yes, they are able to securely and reliably onboard and capture the details of funds from their employees right now. But the 69% is split across mostly not yet, no, and unsure. So there is still a lot of uncertainty out there. But it's great to see that many do have, secure processes right now for onboarding employees, validating those details as well. Critically important that you make sure those are in place as we run into Payday Super, because as we said, having that accurate data up front will make sure that you minimize the risks of errors come payroll processing time. Thanks for everyone responding to that. And now I'll hand back to Tanya to dive into what we can be doing today.
Cool. Thanks, Rob. Okay, so as we look ahead to the payday reforms, there are practical steps that you can take now to get prepared, and also as payday comes closer and closer. So the first one is around onboarding. So we know a strong onboarding process is the first step towards meeting your payday obligations. So right now, take a look at your onboarding. Make sure that you capture your employees' choice of fund upfront, ideally before their first day. And just as important is to ensure that they give you valid details. So getting employee data right at onboarding is essential to ensure that super contributions are processed efficiently and reach the correct accounts. We know that inaccurate or incomplete data is currently the leading cause of contribution errors, with roughly 50% of errors due to member not being found, and many others stemming from incorrect fund or member details, which also then leads to creating extra reprocessing work for yourselves as employers. Employment Hero currently has employee self-setup process. It's a digitized onboarding flow that actually is a compliant and efficient and quick and secure process to actually onboard new employees. The other thing employees should be looking at right now is around managing cash flow. So for many SMBs, this is the most practical concern. Forecasting super contributions per pay cycle is critical. If you're weekly, that's a shift from 4 large payments per year to 52 smaller ones. So reforecast budgets to reflect new obligations. Integrate super into weekly, fortnightly cash flow forecasts instead of quarterly. Look to update your financial models to ensure payroll and super are treated as a single non-negotiable expense line. And for those of you who get to work with an accountant or bookkeeper, start working with them to actually model out your cash flow when payday comes along. As payday gets closer, educate employees. So this is a cultural shift. Super will be no longer paid quarterly. It's going out with each pay. Employees may notice this, ask questions. So inform them about upcoming changes. Many won't be aware that SG will be paid with their wages. Importantly, ask them to keep their fund details up to date, especially if they changed during employment, and position it as a shared responsibility so you can meet your obligations and they can get their super paid on time. When we're getting closer to payday, review your remittance framework. This is a very big one. So every SG payment, we know we've touched on this many times, must reach funds within 7 calendar days. So be clear on your internal processes. Decide who prepares, who approves, who presses pay. You don't want to be waiting on approvals on day 6. That's for sure. And also confirm your clearinghouse and your current process can deliver on time and return error messages when those proposed legislation should they land. And consider transitioning, and we've seen a few employers do this, but transition to payday now. So don't wait till June 2026 to switch. So think about transitioning now and gradually. So if you pay monthly, consider moving to monthly payments. One thing that I like to call out is specifically for a lot of Australian SMBs that come under modern awards, your pay frequency may already be set in the award. So FYI, modern awards provide the minimum entitlements that employees are entitled to because of their job. So look at the industry or the employer or their occupation, and then look up the relevant award that applies to your business. And the modern award will mandate the pay cycle, which will also determine the super payment cycle as well. So that's it for our talk, and keen to move on to Q&A. So over to you, Rob.
Awesome. Thank you very much for that. Tanya, I'm flabbergasted that we came in. We said we'd have 15 minutes for Q&A and we're at 17, so nice work. Thank you everyone who's submitted questions. We've got a lot of great questions coming through. I can already see that we won't be able to get to all of them today. We're going to try and cover off a few ones that we've seen come through a couple of times right now, but we will try and respond to as many as we can afterwards as well. So thank you everyone for sending these through. I'm also just going to acknowledge that some of the questions are really great and we won't be able to give hard and fast clear answers right now because they're actually playing into some of the spaces that are waiting for the final legislation as well. So an example of that, I'm just going to start kicking off with some. So there's a great question here. Will you still be charged the super contribution charge, the fee, if you've tried to make the payment within 7 days, but the funds bounce for whatever reason? So that is one that there's a few things there. One, if the funds were to bounce for payment issue or error, our platform would try to make sure that there's login for that so that you can make sure that you have that evidence of a delay that was outside of your control, firstly. Secondly, if the funds were to be returned by a super fund because they, for an example, had an error, member not found, then the current legislation is not clear whether the 7 days requirement would start again because the funds went to the super fund and then came back again. And that's something that was requested to be clarified in the final draft. So hopefully that is something that we'll see a bit more information about, but great question there about whether there's any delays outside of your control. Does that impact the super contribution charge? That's something that we're looking for more clarity in the final updates. Another one that I've got here is that questions around the 21 days from first payday or start date of employment. So that's when an employee onboards. We said that there's 21 days leeway for new employees, not the 7-day requirement. As mentioned at the early start of the presentation, for new employees, Tanya was mentioning that the due date is from the first qualifying earnings day. So it's more aligned with the payday, not the day that employee onboards. So it's still aligned with the first payday qualifying earning day. Tanya, was there any questions that you wanted to go through? I can just
not at this point. You can jump into the next one.
Yep. So Sorry, there's a lot, so I'm just trying to jump up to one that I found that was really good. A question, how will ATO verify an employer's pay cycle? Will this be enforced by using the STP submission cycles? Yes, it is aligned to STP submissions, so they'll be able to see that cycle time running through, and that's what they'll use for timing of the 7 days. So it is aligned to your STP events. So I'm just trying to move down to the next one. Tanya, please jump in if there's any that you want to go through. Otherwise, I'm just trying to find. There's been a couple of questions in relation to independent contractors. I typed back to one of those. It'll really depend on the arrangement that you have with that contractor and how you're paying super under what agreements. So I'd recommend waiting till the final legislation and then getting advice specifically around your contractual arrangements with contractors there for payment of super and payday super.
There's been a few questions around what if you retrospectively find an error or whether you miss a date. We did touch on that we will have auditing and be tracking when super payments have gone out. So you've done the right thing. And if the payments land a day or two later. Now, right now, as the legislation stands, it does just call out the fact that, late payment days, there will be an SG charge. But throughout this consultation period, there's still sort of conversations around, okay, are we going to have a slow up ramp of the SG charge? So that is still unclear. And that's something that we've been working very closely with ATO and Treasury in terms of making sure that there's not too much of a heavy stick with bringing in the new payday legislations that the whole industry, particular small employers, have time to make the changes to what's being brought in as well, because it is quite a big change and it is a huge headwind that is coming along. So we want to make sure that we're all prepared and that you're not left on the back foot.
Thank you. A question here in relation to existing clearinghouse activities. So someone noting that their existing integrated clearinghouse solution takes almost 2 weeks for the funds to hit the employee's super fund, which leaves a very limited window. How is this going to be rectified by the clearinghouses to make sure that it lands with the employee's accounts sooner? Definitely with these changes, the entire clearinghouse space will be looking at how movement of money occurs, but everyone's really on board to ensure that that 7-day timeline is met for employers. So there are requirements for processes to come in very quickly, particularly with MPP. It's going to be much easier and faster. Another question here in relation to the SG charge. Yes, that is one that if you identify that you've had a late payment of superannuation, the SG charge will be, the late payment will be notified by the employer to the ATO, SG charge calculated and settled. It's always best to try and self-identify and report that to ATO and settle out, or the ATO might also independently identify those. Another question here about what do you mean by an integrated system? Do you mean us having a payroll system that was fully, oh, the question just disappeared, so I'm not able to see it. Sorry, that one moved out. I'll try and come back to that one in a second. I'm guessing it was a question in relation to the integration of the new HeroClear solution that we're looking at. So basically what we're saying there is that all within one space within your payroll module, you'll be able to complete payments and the validation of member details and see those details in advance, and all the errors and returns will also come into that same payroll platform. So we're trying to move that all into one space rather than employers having to move between potentially an onboarding solution, HR payroll solution, banking platform, and clearinghouse, trying to make that all in one space so it's much easier for the employer. Tanya, was there any that you wanted to jump in with?
Yeah, there was a question of sometimes not hearing back from employees in terms of making a choice or or providing their super upfront. So the employer can then pay to the employer's default fund.
Yep. Another question about clearinghouse. A question here, if we don't have a response from an employee for the fund return, is it legal for us to be able to create a super account with our default? Is that the one that you just answered?
Yep.
Yep. Thank you. Sorry, on the same page there at least. Sorry, a lot of the questions are quite detailed, so I'm just trying to read them to get context.
There was a question here around a big issue is USI changes and fund mergers. So with the HeroClear solution, we are implementing the ability to actually detect those changes and earlier as well. So we'll be notifying employees and yourselves if there is a fund merger or a USI change. And with that process, what you'll need to do is get the employees permission to opt in. We can do that, or the solution will be doing that on your behalf. And then should they opt into the change, which means they're sticking with the super that they have nominated, then we'll be making those payments to the new fund. So it's all going to be happening within platform, so you won't have to worry about that.
Thank you. There's a few questions around out of cycle payroll payments or adjustments. We'll need to go back through and just check against the qualifying earnings day. But it is one that at the moment I'd expect that the 7 days is still applied to those out of cycle payments, but we will review the legislation and confirm separately afterwards. Questions about how long will it take for the EH and clearinghouses to credit the super to employees' accounts so they remain compliant. I would say that we can't comment on other clearinghouse solutions. Employment Hero is looking to build a solution so that the moment the payroll date is fully finalized and due to be paid into the employees' accounts, we're trying to work out a system to make sure that funds are moving straight through those super funds as quickly as possible. Working with partners to try and achieve that. It obviously depends on the payment channel used, but that's why we're trying to provide options there. We'll have further updates on that as the product is built out and real clarity on that as we get to it.
There was a question here around will HeroClear work with the employer's chosen clearing solutions such as Quick Super, I think. So HeroClear is actually Employment Hero's clearing solution. So in terms of being able to see real-time error messages, being able to fix those or even have the pre-validation, so to ensure that you actually don't be hit with an error in the first place, that's actually using our HeroClear solution versus an alternate clearing solution. So hopefully that makes sense.
There's a few questions around the timing of when you pay funds and how that will process through the clearinghouses. I'll just note that, yeah, for each clearinghouse we can't comment, but we do note that the entire industry is looking at how money movement will move faster to make sure that it gets those super funds more quickly. Good question here in terms of an employer who pays monthly, but they do it half in advance and half in arrears. So they're paying on 15th of the month for the full month. I would say that the superannuation pay cycle will align to that structure. So your qualifying earning day would still be that 15th day. It's a great question, though. We will check that with the legislation and come back.
There's a question around automatically debiting the funds before doing wages and super payment. So yes, that in terms of building in the approval steps, that's going to be built into the solution as well.
Also, just a clarification on the super contribution charges. The question was, in the example provided, do the funds go to the employee's account? The employee's super fund only receives the monies to make them right and correct in terms of what superannuation contribution they should have received. The charges or penalties are paid separately to the ATO.
Questions around whether we have a solution for New Zealand. Not for HeroClear at this stage. This product is primarily focused on the Australian market.
Good question here on what is the process for showing the stapled fund during onboarding when you onboard 20 to 40 people fortnightly. That will really depend on what the onboarding solution is that you're using, and whether you're using a bulk onboarding service or individual onboards one by one. Can note that the Employment Hero onboarding service does enable you to load bulk details so that employees all get requests to complete their onboarding directly through the employee self-service module. And through that, we can ensure that their stapled fund is presented through the integration and that we validate those details. But it will depend on what onboarding service you're using there. Another question in relation to costs. So the question was, are you intending to waive the additional charges for integrated super when processing occurs for more than one per quarter? So Beam doesn't currently charge any fees, but there's an EH fee. So the integration with Beam right now, we definitely will be reviewing the pricing and structure there because it is based on the quarterly assumption right now. So that will be reviewed in advance of Payday Super. Similarly, for the Employment Hero HeroClear solution, that will be an all-encompassing solution. We'll be looking at the pricing structure for that and trying to keep it as minimal as possible, but there is, payments fees that we incur for that structure as well.
There's a question here around disclosures to ATO. How does that happen? So that's actually on the ATO website currently, where they give you a couple of options to disclose, and not sure yet if that process is going to change, but currently you can go to the ATO website to look up how you do it.
Separate little side question around default super funds. Do employers need to have a default super fund? Yes, it is very important that you have a default super fund nominated for your employees during onboarding. That should be presented to all employees as part of their super choice form. Tanya, was there any others that you wanted to cover? Otherwise, we're getting close to time, and I think we wrap it up, and we'll endeavour to try and come back on as many of those questions as we can separately afterwards.
Yeah, sounds like a good idea.
Look, thank you everyone for joining today. It's been really great to run through with everyone. We've appreciated the amount of questions that's come through. It's really given us great, clear direction on just where some of the focus areas are for small to medium businesses. And we'll be eagerly awaiting the new updated or finalized legislation coming through for Payday Super. Thanks for joining. We appreciate you taking the time. This session has been recorded, so we'll be sending out materials afterwards of the recording and some further updates on the questions that have come through. Thanks, everyone. Appreciate it.